it's Mike over Cross Country Mortgage, and it's Monday morning, the week of April the 7th. It's time for your Monday morning mortgage update. I was trying to give you some insight about what happened last week, how it might affect the market this week. So when you go out and buying and selling, helping those clients that are buying and selling, you have some knowledge that can help you make some great decisions. So what happened last week? Let's just go right to the charts because it was a volatile week, and I want to explain what happened. So this is a representation of the trading of mortgage-backed securities. This is a 6-month chart. On the right is today. It's a live chart. That's why it just recalculated here. On the right is today. On the left is 6 months ago. And these bars are called candlesticks because you can see the wicks on these, which show how much trading was given in one day. They represent one day of trading. When we see this graph go up, that means money's flowing into the bond market. Rates are going down. When we see the graph go down, the red bars, money's flowing out of the bond market, and rates are going up. And you can see today on the right-hand side, we're starting 43 basis points down. So think about a rate like a product, like a refrigerator. You have the actual refrigerator, which is the interest rate, and then the cost of that refrigerator, which would be a discount point. So if you're going to pay 1% in a discount point, that would be how much you're going to pay to get that specific rate, which can be all over the place depending on what's happening in the market. So today it's 9 o'clock in the morning. We've already lost 43 basis points. So that rate on Friday, now that refrigerator on Friday, if you will, is now costing you 43 basis points more or points more, which is not 1 point, it's 0.43 points. So why is this happening? And let's talk about what happened last week. So last week, you can see on the 31st to Friday, we saw a really nice improvement in the market. Money was flowing in. We're up 23 basis points ending the week. But look at those wicks. They're huge, huge wicks. That means there was a ton of volatility where prices went up, prices went down, rates went up, rates went down. And we got some gains, but we lost a lot of those gains on Friday. Why? It's all about tariffs and the uncertainty, and bond traders don't like uncertainty. So when there's uncertainty, when there's instability, those bond traders, which is where mortgage-backed securities are traded, which this is what it shows, money will flow out of that bond market when there's uncertainty in some cases. Some cases it'll flow back in, but there's just so much unknowns about the impacts of these tariffs that their money's pulling out of the stock market and the bond market. We also saw increased unemployment. That's good for mortgage rates. But then we saw a lot more jobs added on Friday. That's bad for mortgage rates. So just a ton of volatility. This week, we expect a lot of volatility. Today, as I said, we already started out and lost all the gains that we got last week. So the rates went up and we lost those gains. So this is something I want you to pay attention to think about. And I tell my clients this all the time. When is the best time to refinance? When is the best time to lock in interest rate? Well, some people think the best time is you try to time the market and find out the best time. But as you can see last week, if you didn't lock on Thursday, you lost all those gains by today. And I locked all my clients on Wednesday and Thursday, so they were safe in those gains. And if you don't have a loan officer that's paying attention to the market, you can lose thousands of dollars in a day or a couple days because of the volatility that we've experienced just over the last 6 to 12 months. And we're seeing more of that volatility now than ever because of what's really happening in the economy. So what are we looking at this week? We're looking at two things. We're looking at tariffs again, and we're looking at inflation. So on the 5th of last week, the Trump administration came out and said, hey, we're announcing tariffs. And a lot of the bond traders, which are trying to hedge against what's going to happen, they try to trade early. There was a lot of sentiment that the Trump administration was going to say, hey, we're using this as a negotiating tool. We're really not going to throw the hammer down because he's done that in the past. Well, he did. He said 10% tariffs across the board for everybody. That's real. That's here. That's not going away. He said it's not going away. And 5% on autos. So everybody has to deal with that. That means, does that mean it's more expensive for us to buy stuff? Or are the companies going to absorb that increased cost? Or are they going to share the love? They'll pick up some and they'll pass some on to the consumer. The sentiment is we're going to pay for a chunk of that. There's going to be some pain before it gets better. And of course, the argument is these tariffs are going to bring jobs to our country. It's going to be better for our economy in the long term. But nobody knows right now. So there's just a lot of uncertainty. The second thing is this week, in the 9th, is a second set of tariff announcements where they're going to, EU, for example, hasn't even reciprocated or thrown back tariffs on us. So a lot of countries that haven't said what they're going to do probably are going to do that this week. So we're really paying attention to April 9th. More tariff announcements are going to be announced by the Trump administration. And what are other countries going to do this week? And how is that going to affect the economy? Stock market is in bear territory. It's coming down. And is that going to have some effect on the bond market? Second thing is inflation. So two inflationary reports come out this week. They come out every month. CPI, Consumer Price Index, PPI, Producers Price Index. CPI is what the consumers pay, and PPI is what the producers pay. We want these numbers to start coming down because inflation is the death of mortgage rates. These numbers have been raising at a lower clip. They're not coming down. They're not negative. We're not seeing inflation come down. They're just not going up as fast. The expectation is we're going to see more reductions in the increase of inflation. Heck, if we see a reduction, that's going to be really, really good for mortgage rates, but nobody expects that. If we hit expectations, it's not going to impact mortgage rates, but if it's below expectations, then mortgage rates should get better. The big attention will be paid to PPI, which usually we don't pay a lot of attention to because those tariffs impact what companies are paying for stuff, and are the companies actually paying more for stuff? We're a little bit ahead of it right now because the tariffs just got announced last week. But did these companies anticipate what's coming? Did they raise? Are they paying more for stuff in anticipation? And so we'll see what those numbers look like. If you have any questions about the market, don't hesitate to give me a call. Have a great, productive week. Forward this to somebody that you know could benefit from this video, and I will talk to you soon. Bye-bye.